Ladies and gentlemen, good day and welcome to the Gravita India Limited Q1 FY25 conference call hosted by Antique Stock Broking. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded, and I've handed the conference over to Ms. Manish Mahawar from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Neha. On behalf of Antique Stock Broking, I would like to welcome all the participants on the 1Q FY24 earnings call of Gravita India. From the management, we have Mr. Yogesh Malhotra, Full-Time Director and CEO, Mr. Vijay Parikh, Executive Director, Mr. Naveen Sharma, Executive Director, and Mr. Sunil Kansal, CFO on the call. Without further ado, I would like to hand over the call to Mr. Malhotra for opening remarks, post which we'll open the floor for Q&A. Thank you, and over to Mr. Malhotra.
Thank you, Mr. Manish. Good afternoon, ladies and gentlemen, and welcome to our Q1 FY25 earnings call. I trust you have had the chance to go through the earnings presentation and financial results that were uploaded on the stock exchanges. I'm pleased to announce that Gravita has begun the year on a positive note, achieving a strong performance in the first quarter of FY25. Before we delve into the results, I would like to share some strategic highlights and project updates. Due to stringent government regulations under BWMR and EPR, the availability of domestic scrap is increasing, and consequently, our sourcing of domestic scrap is also rising. Of the total scrap Gravita has sourced in India in Q1 FY25, more than 40% is domestic scrap, depicting a growth of more than 50% in volume on year-on-year basis. As you are already aware, Gravita engages in back-to-back hedging of lead to mitigate risk and is also working on a hedging mechanism for aluminium. The Ministry of Finance has notified aluminium alloy under the Securities Contracts Regulation Act of 1956. We anticipate the launch of the aluminium alloy commodity derivative on the MCX shortly. This development will play a crucial role in managing the risk associated with the price volatility. By effectively hedging against price fluctuations, we can ensure more stable and predictable financial outcomes. This stability will ensure that we allocate resources more efficiently, make informed strategic decisions, and ultimately scale and expand our aluminium business with resilience. We are setting up a pilot project for lithium-ion recycling and our first Indian tire recycling plant at Mundra, both of which are expected to be operational in H1 FY26. The paper recycling plant and steel recycling plants are anticipated to be operational by financial year FY27. We are currently in the due diligence phase for both the projects. Gravita is also advancing strategically to meet its short-term, mid-term, and long-term goals by FY27, FY34, and FY50, respectively, as outlined in its ESG roadmap. By embedding ESG principle, Gravita demonstrates its dedication to long-term sustainability and value creation. Coming to operational performance, we saw a substantial increase in volumes in Q1 FY25. Overall, we saw a growth of 29% in volumes. Volume of lead, aluminium, and plastics stood at 41,900 tons, 2,460 tons, and 3,190 tons, respectively. Coming to quarterly EBITDA per ton performance, EBITDA per ton of lead, aluminium, and plastics stood at 19,321 per ton, rupees 19,414 per ton, and rupees 10,077 per ton, respectively. Moving to financial results for Q1 FY25, revenue for Q1 FY25 increased by 29% to rupees 908 crores. 47% of revenue in Q1 FY25 came from value-added products, which is in line with our vision of achieving 50% revenues from this category. Adjusted EBITDA for Q1 FY25 increased to rupees 91.24 crore, up by 33% on year-on-year basis. EBITDA margin stood at 10.05%. PAT showed significant increase of 29% to rupees 67.33 crores on year-on-year basis in Q1 FY25. PAT margin increased to 7.42%. In conclusion, Gravita is making impressive strides toward its clear vision 2028. Our strategic focus is on expanding existing verticals, aiming CAGR growth for our volume above 25%, profitability growth over 35%, and ROC exceeding 25%. We are also committed to raising our non-net business share to over 30%, using more than 30% renewable energy and reducing energy consumption by over 10%. These efforts underscore our commitment to sustainable development. Our successful strategies, including capacity expansion, increasing the proportion of value-added products, and managing risk through back-to-back hedging, have resulted in robust and sustainable margins. With over 31 years of recycling expertise, 12 advanced eco-friendly facilities globally, a footprint in over 70 countries, an integrated supply chain, stringent BWMR and EPR regulations, and strong support from stakeholders, we are poised to achieve our vision 2028, as well as diversifying into new businesses, new areas like lithium-ion, steel, and paper recycling. That's all from my end. I would now request to open the floor for questions and answers. Thank you, and over to you, Mr. Manish.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, hi. Good afternoon, everyone. Thanks for taking my question and congratulations for a great performance. I have two questions, sir. The first one is on aluminium. If I look at EBITDA per ton, that has increased materially, while production is, of course, a little bit subdued. Maybe because so far we have not got that hedging clearance. So just wanted to understand the key driver behind this EBITDA per ton improvement. Is it purely LME driven or LME scrap spreads were a little bit more benign? And how do we see it going ahead? So that is the first question, sir.
Yeah, Amit. So basically, this improvement in EBITDA definitely partly came from the LME, which is the metal prices which improved in this quarter. So as we already discussed that this aluminium, because we are not fully hedged on this metal, so always when the prices are higher, we get slightly better on the margins, and definitely on the other side, when the prices are lower, we get lower margins. So, but as Yogesh mentioned, that we are going to, in future we are going to hedge this metal also, as we do in lead. So we are discussing this matter with the MCX, and they are coming up with the product. So in future, this will be in the range of 15 to 16 rupees, which is a stable kind of a margin per ton, 15 to, per kg. So 15,000 rupees per 15 to 16,000 rupees per ton. So that can be a stable margin for future. We can assume. Yeah.
I would also like to add here that we have got some contracts in India, price contracts in India, and therefore we are shipping some material from our overseas locations into India. Most of these price contracts are on the basis of M-1 or M-2 pricing. So kind of giving a natural hedge to our positions, inventory positions overseas. Because of this, you will see, even if the MCX is not there, you will see some stable margins coming in the next quarters.
Okay, got it. The second question is on we have closed some subsidiaries, quite recently, Jamaica, Ghana, etc. Now, we were expecting, while these, two of them were non-operational at the moment, but can you just clarify the reasons behind closing these subsidiaries? Does it change our business case in any way? I just wanted to understand that.
So, yes, Amit, you're right. We have closed two subsidiaries, and one in Costa Rica and one in Jamaica. But these were earlier we were into plastic PET recycling business in Central America. So at that point of time, we were having one plant in Jamaica and one scrapyard in Costa Rica. So we were doing some processing of PET recycling in Nicaragua also, which the subsidiary we sold few years back while in COVID. There were some scrap shortages because of COVID. So we exited from those countries. So these were some operational company and non-operational companies which we were trying to close this, and there is no impact on the business that we sold this equity of Nicaragua entity, and we were in the process of selling these closing this subsidiaries in Costa Rica and Jamaica also. So because we exited from this PET recycling business fully, but now we also plan to have PET recycling business in India, where we are planning to put a independent PET recycling facility for food grade plastics, for food grade PET in India. So that is a upcoming business because we have that experience in Nicaragua.
Okay. So I mean, the closure of the subsidiary doesn't mean that, our future plans that we have in other geographies of expansion into other verticals also, maybe steel and rubber, there is no impact.
So there is no impact because we are coming out of those geographies. We have already come out of those geographies. So, but we have plans in Central America, but in some different geographies. So it will not impact any future plans, any expansion plans in the future.
Okay, great. Thanks for the clarification. All the best.
Thank you. Thank you, Vijay.
Thank you. The next question is from the line of Bharat Shah from Ask Investment Managers Limited. Please go ahead.
Yeah, hi. You mentioned certain targets. I couldn't fully catch all of them. What I understood was that ROC 25%, which we have talked about many a times, growth rate of 25%. Did you mention profit growth of 35%, or at least that's what I understood?
Yes, sir. So we've always been saying that although the volume will grow at 25%, but because of various initiatives, the bottom line would grow by more than 35%, because there we are trying to increase the value-added product content. There would be certain economies of scale, and also the new verticals of plastic and rubber are a little more profitable as compared to lead and aluminium. So definitely the bottom line target to increase bottom line growth by around 35% in the next 3 to 4 years.
So other reasons are like, sir, the fixed cost is remaining same. Like the interest cost is also, we are trying to bring it down by having a more cash flow, better cash flows, because of the more business coming in from the domestic part. So the improvement in bottom line, like profitability, will be better than the growth in the volumes.
Okay. Now that was good to know, because all along in many discussions that we have had, my impression on top line growth of about 20-25% I was well captured, but this is an interesting new addition. Thank you.
Thank you, sir.
Thank you. The next question is from the line of Sumangal from Kotak Securities. Please go ahead.
Yeah, good afternoon, sir, and congratulations on a very strong set of numbers. My first question is with regards to the new businesses or new categories which we are entering. Are we looking for any technology tie-up, or we think we are self-sufficient, especially for lithium-ion recycling, lithium battery recycling? Number one. Number two, have you started collecting scrap for these businesses? And once these recycling plants set up, what sort of margins should we expect? Given the initial phase, do we expect the initial few quarters to be loss-making, or some sort of normalized level of margin one can expect given the visibility on the scrap side for these businesses?
So in lithium-ion battery, it's going to be a pilot project. So in lithium ion, the first part of the technology of creating black mass is basically over-the-counter technology that we are buying. And the second phase where we will be refining metals or extracting metals out of it, that technology will be building in-house. So that is why it's a pilot project. Right now, although we have certain interest to import scrap from other countries also, but all of this has to wait till the time we have set up our own plant. And battery scrap in India is not currently to the tune that you can buy it currently. So the scrap will start coming probably in a matter of 2 to 3 years. But there is some scrap availability in some of the developed countries from where we have already seen some interest. As far as rubber is concerned, it will be a profitable business right from the day one. Of course, there will be some time to set it up, but it's going to be a profitable business. But lithium-ion battery recycling is just a pilot project. We want to be there to understand the technology better, to understand the flow of material, to tie up with battery and car manufacturing companies. So that is why this is more of a strategic business currently.
Understood, sir. Understood that.
Thank you.
Sir, my second question is on the aluminum business. We were talking about also a very strong growth this year. Do we expect that to now start reflecting from the second quarter onwards, or there is some bit of kind of a...
Yes, sir. So what I mentioned earlier also is that we have now got some contract in India, which are stable in nature in the sense that they are based on, the pricing is based on M-1 and M-2, that it means 1 or 2 months prior. So based on this, we can now start production at our overseas plants and start shipping it to India. So we have already done that, and currently around 2,500 tons of material is already shipping towards India, for which we have a pricing offer already. So you will start seeing these results from Q2 onwards of the growth.
Additionally, there is another plant we are starting in Ghana, which is upcoming shortly. So that will also add up some volumes for aluminum business in overseas.
Understood. And from when do we expect the hedging instrument be available?
We are expecting it in this Q2.
Okay. Understood. My next question is on the penalties on OEMs for the recycling obligations. So we were expecting this to be somewhere around June, July. I mean, what's the latest timeline? And from our interaction with the ministries and with the regulators, when do we expect this to be implemented?
Yes, that particularly EC is under discussion with CPCB and the manufacturer and producers of batteries, and with consultation with recyclers. So I think this should be finalized within this Q2. Lead acid battery almost finalized between both of them, while in case of lithium-ion batteries, it is still under some discussions, but it will be released together by this quarter itself.
Understood. That's all from my side. Thank you and all the best to the team. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to 2 per participant. Thank you. The next question is from the line of Meet Bharatbhai Rachaj from Anubhuti Advisors. Please go ahead.
Yeah, thanks for the opportunity and congrats on very good numbers. My first question is to Sunil sir. Sir, in this quarter, other income is reduced materially QOQ and YOY basis. So can you give us the bridge or breakup between the forex gain or loss, the commodity forward contracts gain or loss, and the treasury income?
Yeah, you're right. This quarter, other income is showing slightly lower. So there are two components of other income. One is operational other income, and another is the non-operational other income. So operational other income, we consider whatever contribution is coming from the commodity contracts or currency contracts. So that we consider as the operational part, and whatever is coming from other sources like interest or bank interest or something like that. So that is non-operational part of other income. So this quarter, approximately 3.57 is the operational part, and rest is the 3.3 crore is the non-operational part. So historically, whatever hedging income is coming from the commodity contract, so that also fluctuates, because whenever we are getting better from the operational side, we lose something on the exchange contract. So that is a compensation of a physical contract. So this quarter, it is on the exchange part, it is a negative slightly 0.86 crore. So that is shown in the other expense part. So that is the reason, and in the previous quarter it was on the positive from the exchange part, and we were losing on the physical part. So it's a compensation. So that is the reason we consider it as an operational income. So this is the reason in this quarter it is lower.
Okay. So 3.3 crores, which is non-operational, 3.57 which is operational. Out of that, 0.86 is charged to other expenses, right?
0.86 is a negative which is already covered in the other expense part. So there is no impact on the other income. So other income part, 3.3 crore is the non-operational part, which we have not considered in the adjusted EBITDA.
Okay. Only 3.57 is considered.
Yeah.
Understood. And the second question is on employee cost. So YOY, the increase is only 9%, but if you look at QOQ, it is a material increase of close to 60%. So just wanted to understand whether we have any annual incentive payout in Q1?
Yeah, you're right. So basically, we are expecting a larger growth in this year, as we were lower in the volume growth in the previous year. So we are targeting we are trying to cover up part of that also in this current year. So we have announced some incentives also, which is close to 9 crore additional incentive. We have make a provision for this in this Q1, and there is some part of annual increment also, which is 9 to 10% annual increment we do. So that is also some provision is taken on that account also.
So Q2 should likely witness a dip in employee cost, right?
Yes. So slightly, maybe. So I think it should be in this range only.
Okay. So you are expecting another provision of incentive in Q2 as well?
Because we have whatever incentive we have taken in this quarter one, that is in the proportion of in this quarter for this quarter only. So whatever will be for the full year, so 1/4 we have taken in this. So that way we have.
So if we meet our targets, if we keep on meeting the targets, then definitely the salary component would be similar. So you can expect a similar numbers in this.
Understood. Okay, thank you.
Thank you. The next question is from the line of Keshav from Roxan Investors. Please go ahead. Mr. Keshav, your line has been unmuted. Please go ahead. Due to no response, we move to the next question, which is from the line of Manav Vander from Wallfort PMS. Please go ahead.
Hello, am I audible?
Yes, sir.
Yes, please.
Thank you so much for the opportunity, and congratulations on the good set of numbers. Sir, I had 3 questions. I just wanted to understand, when will the rubber plant be operational?
So the plant for rubber recycling in India, although we already have plants outside India, but most of those are used for captive consumption. The rubber plant would be operational by H1 FY25.
FY27?
26, sorry. 26.
26, okay. Okay. And so the next question is on the CapEx side of it. In our presentation, it's written around 600 plus crores of CapEx till FY27. So will it be debt funded or internal accruals, and how will it be?
Yeah. So, this 600 crore CapEx, it will be majorly from the self-funded. We are not taking any incremental debt except small debt for working capital for the future. So, we have enough cash flow for funding this incremental CapEx also and part of working capital also. So we are not going for the debt for this CapEx.
Okay, understood. And can you give the CapEx numbers for current year FY25?
Sorry, FY25?
FY25 CapEx numbers, can you give, sir?
So, it is estimated at approximately 180 crores, which includes 40 crores of, which includes the, which includes 140 crores for the existing verticals and 40 crores for new verticals.
Okay, sir. And the last question, sir, about the profitability side of it, as you know, the presentation mentioned around 35% growth YOY CAGR till FY28. So is it safe to assume that the PAT would be around 800 CR in FY28?
So, we have not calculated that number, but yes, 35% volume growth, PAT growth of 35% on PAT basis, on CAGR basis.
So it would be around 750 to 800 crores, yes, you're right. If we achieve our targets.
Okay, okay. Thank you so much, sir. That's it from my side. Congratulations.
Thank you.
Thank you. The next question is from the line of Bhuvan from Tiger Assets. Please go ahead.
Hello, am I audible?
Yes, sir.
I just wanted to know what is your sourcing strategy in lead? How much percentage comes from OEMs, how much from other dealers, and how reliable and how stable are the prices? Yeah.
So in India, most of the procurement that we are doing currently, around 80% is through OEMs, where we have a tolling kind of arrangement where we get a fixed margin. So it doesn't matter how much variability there is in the prices of those material is, because eventually you only get processing charges from the OEMs. So it's pretty stable in as far as the profitability is concerned for us in that business.
Okay, thank you. And I wanted to know, in lithium and recycling, which technology you would be using, hydrometallurgy or pyrometallurgy?
So hydrometallurgy definitely, but we would have to develop that technologies on our own. So it's a little premature to talk about what kind of so it's generally in hydrometallurgy only, but it will take some time to develop that technology. So maybe next year we can talk about that technology also.
Okay, like presently, what is the progress in your R&D?
Sorry?
What is the progress regarding this technology which you are developing?
So see, we have already decided to set up a plant. As I mentioned that there are two phases. The second phase would be where we would do hydrometallurgy, and we've already earmarked the capex and the equipment that has to be bought. So we'll be buying that equipment, and then we'll do the R&D of refining in those machines or plant and machines itself.
Okay.
So once the equipment is installed, only after that you will be able to know the development on that phase.
Okay. Any idea how much you would be incurring capex for this segment?
In this year, it will be around 40 crores this year. But overall, around 70 to 100 crores would be on lithium-ion battery in the next 3 years.
Okay, that was it. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Siddharth Malhotra from Kotak Institutional Equities. Please go ahead.
Hi, sir. Congrats on a great set of numbers. Just a quick question. Sir, can you tell me what our net debt level is as of 1Q FY25?
Yeah, so our gross debt is around 550 crores and net debt is around 470 crores.
470 crores. And this was around 450 crores last quarter. So am I given to understand that our working capital days has remained at a similar level as